My first post this week was about the language of inflation. I wrote about how it's easy to talk about inflation and think about it in a sloppy way, and it's worth being precise when we dive into that topic. Specifically, I talked about the difference between price levels and inflation. So, the price level is what the price is at today. If a gallon of milk costs $4, that's the price of milk or the price level of milk. Inflation is how that price level is changing over time. And inflation is normal. The Fed targets an inflation rate of around 2%. And we have seen inflation rates in the US economy trend back down toward that level, given the increased interest rates that we've seen over the past couple of years. So it's not specific about what we're seeing necessarily out of inflation today. But it's much more when we talk about inflation. What do we mean when we talk about an inflation rate? Are we talking about a month over month rate or a year over year rate? Are we talking about the price levels themselves? It's worth being careful and precise in how we talk about inflation, because otherwise the whole conversation becomes very confused. My second post this week was about U.S. Steel, that we had a deal between Nippon Steel and U.S. Steel to combine. President Biden squashed that combination, and now the companies have filed suit to try to override the president's decision. What I talked about was how this whole U.S. Steel saga shows us how difficult it is for management teams to satisfy all of their stakeholders. You have customers, you have suppliers, you have employees, you have the community, you have the government. And it's difficult for any business to execute that balancing act. US Steel just happens to show in a pretty dramatic way just how difficult it can be in certain circumstances, and why you really can't take your eye off the ball when making important decisions if you're running one of these companies, because so many interests across so many of your different stakeholders are often in competition with each other. So it's really tough to do. US Steel just happens to show us firsthand what happens when things don't go terribly well. My third post this week was my 2024 recap of Foundations of Energy. I launched Foundations of Energy in May of 2024, and I built it as the learning and development tool for energy professionals, a tool that I wished I had had as I was building up my own strategy and finance acumen in the world of energy. And so I took this post and basically summarized the 29 posts that I had published over the course of 2024. And so we got to see thematically how the posts have varied, what kind of breadth and depth we go into, what sort of data sets I'm relying on to do that kind of work. I also closed my 2024 year recap with some thoughts about what I might do differently in 2025. Specifically, talked about possibly introducing a podcast for paid FOE subscribers, possibly doing a book club for paid FOE subscribers. So the wheels are turning about how we can add more value to this quickly growing community. My fourth post was a link that I shared. I was a guest on a podcast for financial planning for oil and gas professionals, and it was a fantastic experience to be on that podcast. Jared, the host, did an incredible amount of preparation to allow us to be ready to go into that conversation, knowing we'd cover a lot of ground, and then he did a fantastic job of managing us through all that territory. So I wanted to share that link. It's the deepest that I've gone publicly into my professional background and why I chose to launch Krimmel Strategy Group when I did and how I did and what it means. So if you're in oil and gas, if you pay a lot of attention to notions around career development, if you're thinking about how to manage your own career earnings, this is the kind of podcast, this episode specifically, and then all with what they're doing with that podcast generally, are worth checking out. My last post this week was about natural gas prices, and I highlighted that actual natural gas producers don't earn a sales price that's equivalent to the headline natural gas prices that we see. I made an example as I was writing that post. The natural gas prices that you might see if you went to CNBC or Bloomberg was around $3.71 per million BTU. And natural gas producers actually get quite a bit less than that. And the reason is because these quoted prices that we see for natural gas are tied to futures contracts that have very specific delivery dates, very specific delivery locations. And if you or I are producing gas in the Marcellus and we're trying to sell down in Louisiana, and of course, we're going to have to take a bit of a deficit there because it's going to take some expense to move that gas all the way down there. So I showed an example from Expand Energy, which is the newly formed combination of Chesapeake and Southwestern, and how for the third quarter of 2024, when the futures natural gas prices averaged around $2.15 per MCF, Expand was getting about 50 cents less than that. And that's totally normal, but those dynamics are important to understand and important to track. They have a real bearing, of course, on the E&P themselves, but also on service companies and on midstream operators that play in that space. So worth paying attention to all of that as we go through 2025. Each weekend, I send out a free weekly newsletter that I call the Business of Energy. It includes links to and summaries of all the posts that I publish online during the week, so you don't have to rely on social media algorithms to surface what I'm doing for you. I also include a energy related anecdote, insight, or observation that I don't share anywhere else. So even if you've seen everything that I've published online, you'll still have something new to read in the newsletter. The anecdote from last week's newsletter was about a Wall Street Journal article about how green energy companies are responding and frankly panicking in some cases to the incoming Trump administration. So I wrote about what that means and what we might be able to see in terms of the evolution of federal posture around energy. Those are the kinds of anecdotes that I include in the newsletter that I don't share anywhere else. So if you haven't received that, click the link on my profile. I'll also put a link down below. If you haven't checked out Foundations of Energy, that's on Substack. Feel free to just search it out over there. I'll also put a link down below. As always, thanks so much for reading, liking, watching, commenting. I really appreciate it. I hope you had a fantastic week, and we will talk soon.